many of our clients deal in the real estate space, hard tangible assets, and it's mostly like how a house on 123 Green Street, a syndication, but commercial real estate. What you're dealing with is quite unique, and I know you're going to get into that a little bit later.
Yeah.
So I don't want to jump the gun, but it's very intriguing how you structure it, right?
Yeah.
So what I thought about was just like, Jesus, this would be perfect for an IRA, someone who's interested in using a portion of their retirement funds into one of this type of investment opportunity. And again, I know you're going to get into it a little bit later, but what is like the minimums that you see? Like, is it across the board? Is there a minimum? Do you deal with accredited or not, or non-accredited? Or what do you see
Yeah.
ultimately? What are the type of investors that you see?
So I'll answer that question. Then I'm going to briefly step back and tell you how we started and why we started, because that's
Great.
important to all of this. We don't really have minimums. We need to keep it under 35 owners per building. So what we do is we sell a fractional share of a commercial building, long-term lease, busy corner, great real estate fundamentals, great tenant, credit rated tenant, and single tenant building. So this asset class is commonly referred to as single tenant net lease, STNL, single tenant net lease. And basically, they're very easy to own. The tenant covers all expenses related to the building, property taxes, insurance, maintenance, broken windows, clogged toilets, broken sprinkler heads, all of that. And it's probably one of the purest definitions of monthly passive cash flow. And so that's why we like it. We started Millcreek Commercial because we're real estate people. Me and my three partners, we're real estate people. And we would talk, hey, commercial is where it's at. You rarely get phone calls in the middle of the night, and you're dealing with business owners, you're dealing with kind of the non-emotional side of operating real estate, occupying real estate. And we were flipping houses at the time, and that's kind of a dog's life. We weren't very good at it, quite frankly. And we started going down this road of, hey, commercial, let's sell a fractional deeded interest, and let's cater to non-accredited investors and self-directed retirement account owners, and kind of the 1031 exchange space. 1031 is where you sell one asset, move your funds into another, and you defer taxes. But we wanted to help the little guy, right? We wanted to help someone who wasn't worth $8 million, but just had a couple $100,000 in their self-directed, get into an asset that maybe is out of reach, busy corner, like a CVS on a busy corner. We wanted to be able to offer that in someone's investment portfolio, and we love doing that. We love helping people get into real estate that brings a sense of meaningful lifestyle into their portfolio. So that's
and thank you for the clarification. I just want everybody to understand that the fact that we always have a problem or an issue, because the majority of the clients that we deal with are accredited investors. So this tailors to both sides. That's huge. So that to us is a really big deal, because a lot of our clients that we deal with that are terrified right now of the stock market are between the ages of 50 or 60 years old, and they do have a nice amount of money sitting there, and they don't know what to do, right? And there's a perfect opportunity here for a non-accredited investor that wants to dabble inside commercial. They don't have to own the entire, but a fractional or a piece of it. I bring that to your attention because this pandemic has changed a lot of people's lives. A lot of people were let go, furloughed, and they had this opportunity to roll over their old employer plans into a self-directed IRA. We have seen an explosion of that just within the last year and a half, 2 years. So this is a great opportunity. And again, we're here to educate you and offer you opportunities, because again, no member of IRA Club can ever choose the investment for the investor. In fact, I forgot, Spencer, to give our disclaimer. we do these for educational purposes only. We always actually tell you to get a hold of your CPA, your advisors, before you jump into any investment, including your lawyers. So with that being said, I also want everybody to understand one thing. I did attach a handout. I actually added a couple links. One of those links is Millcreek Capital. Don't worry if we can't get to any one of your questions. We will also make sure you get a follow-up email with this recording. But I want to go ahead and really pass the mic off to Spencer. And you have full control right now, buddy, to talk and go into a deeper dive and really break it all down for everybody that's listening.
Perfect. Thank you. So, Ramesh,
See ya.
appreciate that. That's very kind of you. Everyone can see my slide deck here.
Yep, you could see it.
Okay, so we like the tagline "Exchange hassle for happiness." We think commercial real estate really is or can be, depending on your asset class, but the assets we offer can be hassle-free, and that's important to us. We're really passionate about that. We love this idea of helping people just enjoy the benefits of passive income. And so commercial real estate can bring the stability maybe you're looking for to your portfolio. So how is that possible? Well, with a long-term lease, 10 years or more, a tenant that signs what's called a triple net lease. A triple net lease means the tenant pays rent, and then there's 3 variable costs above and beyond the rent that they are obligated to pay for, which is property taxes, insurance on the property, and maintenance on the property. So all the rent that's collected stays in your pocket as the landlord or as the co-owner, co-landlord. And your self-directed retirement account will have a deeded interest in the property, you know, like a warranty deed or special warranty deed or whatever the state the property in, however they issue a deed, that's how we do it. But it can bring a lot of stability to your portfolio. I mean, imagine having rents collected for the next 15 years, scheduled rent escalations, and the tenant pays it, and there's not really a lot of, you know, will the rent get collected? Oftentimes these rents are produced like automatically. Rent is sent right through the mail or through direct deposit, and it's a lot less, you know, hunting down a rent check. So we like that. We like the triple net lease. We like the long-term lease. We think it brings a lot of stability to a portfolio. So kind of the process here, and Ramez, you're going to perhaps provide some context here, but this is kind of how we've seen self-directed retirement account investors come onto a Millcreek property. Number one, they look at what we have to offer, they select a property that they think might work for their portfolio, and we provide them with all the due diligence files in a Google Drive. So you can look at the lease, you can look at the environmental reports, you can look at any video or pictures that we captured when we were on the property, because we visit every single property. And just last week, we were in the great state of Texas on a plane, walking around, looking at the property. We want to look at traffic count. We want to look at general area, surrounding area, and all that, because Google Maps and Google can't really show you what a property looks like, feels like, tastes like, sort of a thing. So we jump on a plane and we go. If you like that property, you indicate your investment amount. Most of our investors are over 100,000. Some of them are under 100,000. We have several self-directed retirement accounts with amounts right around 20,000, maybe 35,000. And so we can fit you into almost any property. You sign a purchase and sale agreement, or I guess Ramez, I don't know, do you sign the purchase and sale agreement on behalf of the self-directed retirement account owner?
No, the IRA is.
The IRA signs it.
Yes.
Yeah, the IRA signs it.
Your IRA is a separate identity from who
That's
you
right.
are. It goes in the name of IRA Club FBO, the name of the account, and that's the way it's structured. One of the things that I love that you said was, and we see this firsthand again here at the IRA Club, Spencer, is most people will never roll over 25,000, 50,000, or 100,000 from their classical brokerage firms if they don't identify the investment opportunity. So I love the fact that you said step number one, identify
Yeah.
the investment opportunity. All right.
Yeah.
Then step number two, to your point, would be to open a self-directed IRA account. And then we'll help walk you through that process. And I mean to interrupt, Spencer. Go ahead, continue.
No, love the context here, because I'm not an SDIRA expertise, so appreciate the context that's needed. So when your IRA signs the PSA, we work to schedule a closing date, and we can schedule it, a couple days out to a couple weeks out, just kind of depending on when we think it will be funded. A commercial purchase and sale agreement is a lot different than like a traditional REPC, residential REPC. I think there's a lot more understanding and flexibility that's needed in commercial, just because, you know, dates matter, but I've seen the residential REPCs, addendum after addendum after addendum, and that's okay. Sometimes we just send an email to the client saying, hey, do you mind if we close on Tuesday instead of Friday? Yes, okay, let's work to that. And we just kind of
a lot more flexibility.
Yeah, exactly. And then we sign your self-directed retirement account will sign on your behalf all the closing docs, the deed, the closing statement, and that sort of thing. And then the next month, your prorated rent is, your pro rata rent is distributed to your self-directed retirement account, and it happens every month after that. So you'll see monthly deposits into your self-directed retirement account because of the rents collected, and that is a reflection of the percent ownership your self-directed retirement account has in that property. So
I wanted to jump in real quickly, Spencer. So I want you to think about this like partnering on steroids. Okay, that's what it is. That's exactly what this is. So you have the opportunity to jump on a 2, 3, 4, 5, 6, whatever the cost of these commercial real estate is, depending on the location, city, city, state, all that stuff takes into effect. You have the opportunity for the next 10, 15, 20 to 30 years, depending on how the lease is structured, that you don't ever have to worry about the volatility of the market.
Yeah.
Right? That's huge, Spencer. And people need to understand that, especially the next 3 to 4 years. But a portion of somebody's retirement portfolio is secured, right? There are no guarantees in anything you do, whether it's the stock market or a house on 123 Green Street, or we'll get into that a little bit later, Spencer. But I'm pretty sure someone is going to ask me the question is, what are some of the risks? We could ask that question a little bit later. But to the point that I was just trying to make, that is a big deal. All right. And it gives every single IRA Club member, or if you're a first-time listener, the opportunity to use a portion of your retirement funds, and you have these funds now more readily available to you because we'll help walk you through this process.
Yeah.
That's what we do here at the IRA Club. That's why Spencer loves us. Yeah. A lot of our partners and our sponsors is we're doing the heavy lifting for Spencer, his investors, his clients, and our IRA Club clients. Yeah. Sorry again, Spencer, I'm interrupting. Go ahead.
No, anytime. So let's talk a little bit about prohibited transactions. And we're big on prohibited transactions because we know that government regulation takes this very seriously. So when you own a commercial real estate or a portion of a commercial real estate, there's not really a temptation to use the property for yourself, right? So a VRBO, I know self-directed retirement account owners who own VRBOs in their retirement account, and they're always tempted to go down and just kind of use it, right, under the radar. Well, when you have a Dollar Tree or a surgery center or an Instacare center in your retirement account, and it's in a different state, there's not really a temptation to go in and use it personally, right? So the triple net brings safety, long-term lease stability, credit-rated tenant security, and the single tenant property aspect brings a lot of simplicity to owning a real estate at a distance in your retirement account. My dad is a residential landlord. He loves going over to his properties, fixing whatever, the gate, the fence, the sprinkler head, the drywall. And Ramis, those are prohibited transactions from the self-directed retirement account owner. Is that right?
100%. That is called self-dealing, which we cannot
Self.
do. And that is a huge plus when you're looking into something like this, 100%.
And so it's hard, it would be hard for my dad to own something in his retirement account because in his mind, it's like, okay, I'm just gonna cruise by the hardware store, pick up what I need and go over and fix it real quick. I'm in and out in less than 45 seconds, but there's no rule on how much time. It's just a yes or no, right? It's a black and white. Self-use, prohibited transaction. You either do it or you don't do it. So anyway, that's why we like commercial, because the temptation of doing it is not really there. So I kind of talked about this. When you own a residential, you got, the disposal needs fixing, replace the sprinkler head, shovel the driveway, remove the snow, replace a doorbell, mow the lawn, plant the, right? All of this very simple, very easy, very not really labor intensive things that all residential properties will experience at one time, right? Well, you have to hire that out. And so in a commercial net lease, the tenant is responsible for doing the equivalent of those things in the commercial property. And oftentimes, in fact, we've, on a few cases across the 25 buildings or so that we've helped syndicate, I think we got one notice or two saying, hey, we had to call maintenance. They fixed it, tenant covered it. And it's kind of like, wow, you never even know if the building you own had a broken window, because the tenant replaces it and they don't really tell the landlord. They just, it's their responsibility. In residential, both in the short-term rental, multifamily, there is a triple T monster: tenants, trash, and toilets. And so these can cause a lot of headache collecting rent, dealing with, vacancy, turning tenants over. My dad in his rentals would always have 2 to 5 weeks between tenants because he would need to go in. Of course, he didn't have this in his retirement account, but someone will still need to go in, clean the property, do any repairs. How come the doorbell doesn't work? It has to be fixed, and it takes time to get it fixed and scheduled. So we like commercial because we kind of avoid that triple T monster: tenants, trash, and toilets. So we think that perhaps the best way we can be used in your portfolio is to help you create a great foundation, a foundation that you can use to build and invest in other investments, but that the stability and security of your portfolio will not be as volatile, and it'll just be steady monthly income. So we like commercial assets on a great corner, great real estate. And I'm not ashamed to say this, but we probably overpay for the high quality real estate. Why do we do that? We do that because if the tenant ever vacates, we want to be able to re-lease that property as quickly as possible. And location, 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 it all matters. We like working with exceptional tenants that sign a guarantee on their leases. What does that mean? Well, if they vacate that location, they're going to continue to pay rent on a vacant building. We think that's pretty powerful. Now, most of the tenants we're dealing with will never have to worry about that, but we like that there's that guarantee that they'll pay rent on a vacant building. And then we like recession resilient assets that can be fully managed. We have a third-party property management company. They're unrelated to us in every way. They collect rent checks, they make disbursements to co-owners, they'll make a disbursement to your retirement account. They ensure that the tenant is compliant in all aspects of the lease. You know, if the lease says provide a biannual HVAC report, right? Then they follow up, hey, please send over that HVAC report, and they distribute that to the co-owners if that's part of the lease. And so you have a lot of help owning and operating your commercial real estate investment. And real quick, a TIC is a tenant in common. It's just a fractional share of a deeded interest. On a, you know, maybe a $3 to $5 million building, we'll have 7 to 17 co-owners in that. On a $20 million building, we'll have 25 to 35 co-owners on that. And so everyone comes in with what they can, and they enjoy the benefit relative to their percent ownership. We see a big mission here at Millcreek Commercial is we want to break down the barriers. What are the barriers? A lot of the barriers, money. A lot of the barriers, finding a great property, a great commercial property. So when you come with Millcreek Commercial and you look at what we offer, you enjoy the due diligence files and look through them. Know that there's 50 plus years of commercial real estate experience here. Our due diligence, we like to call it a white glove experience, right? So we go to the property, like I mentioned, and that way you don't have to. So you can live in Seattle, Washington, and never go to Omaha, Nebraska, and yet you feel like you have enough information on the property with the due diligence files we offer, and you can feel comfortable that this property is exactly what we say it is. So in that due diligence, there's environmental reports, the lease, different spec documents if it's a brand new build, different marketing materials, kind of information on the tenant. A lot of the tenants we work with are publicly traded, so you can go to the SEC website and look at their public filings and all that. So we want to break down all these barriers, finding the right property, finding the right tenant, due diligence, right? There's a lot of barriers, and so we want to break those down, and we want to make what we feel like is the best real estate option for a lot of people, not everyone, but a lot. We want to make those available to anyone, accredited, non-accredited investor. So here's our solution. We purchase a great asset. Our fund purchases the asset. We purchase it debt-free. We like debt-free. We think it reduces a lot of risk. And so our properties offer about 5.5% to 6% with debt. You know, commercial debt's different than residential debt. With debt, investors are maybe getting, you know, north of that. So we think all that debt, all that risk is kind of, you know, contained in that extra % or 2 of return.
Also, Spencer, I just actually wanted to jump in when we were talking about percentages. So you're saying it's about 5 to 6% returns. Imagine if you utilize your retirement, a partial or better yet, a portion of your retirement funds. You're talking about that 5 to 6% within a traditional IRA actually jumps to about 7, 8% through the longevity. When it's inside your Roth, it's 10% or more. Because to your point, Spencer, you're talking about a 10-year minimum. So take that into consideration too when you utilize your retirement funds. You don't pay taxes. It's either tax deferred or tax free. Sorry, I didn't mean to jump in.
No, perfect. And in that 10-year, 15, 20-year lease, there's rent escalations also pre-programmed, right? And it's amazing that you don't even have to remind the tenant, hey, your rent just went up by 2%. And they automatically send you a rent check for more. It's really cool. So after we purchase the property, think of it like a pizza. We divide it up according to who needs what type of a slice, what size of a slice, and we sell away our equity, in this case to your self-directed retirement account. And now you own in your retirement account a deeded interest in that property. And then you know, we can sell those slices to real estate investors, traditional real estate investors, self-directed, 1031 exchange, cash buyers. And so we can really cater to the size you want and the type of investor you are. And let me just let me just put one more point on kind of our acquisition criteria. So if we can meet 3 of these 4 criteria, we think that's a pretty good property. So a net lease, the tenant pays for all aspects of owning the real estate, property taxes, insurance, maintenance. Long-term lease of at least 10 years, a corporate guarantee. These tenants are typically BBB credit rated, BBB minus credit rated or better. And we want a single tenant. So we don't deal in office, we don't deal in strip malls, because, you know, an office building might have 30 different tenants and each tenant signs a different lease. I mean, can you imagine getting 5 people to agree on those lease terms, let alone 25 or 30, right? It can be difficult. So we want the experience to be simple. We want it to be a high return relative to the amount of work. In this case, a few decisions might be made, but you'll never have to pick up a hammer and hammer nails or unclog a toilet, right? And so if we can meet at least 3 of these criteria, that's a pretty good property. Often we meet all 4. And so that's kind of Millcreek in a nutshell.
Thank you, Spencer, for your time. You're the best.
Welcome. The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.